Now see guys, we are going to start with the new chapter now. What will be the name of the new chapter? No. I'll start with agricultural income. So I'll finish agricultural income. Very small topic. We'll start and we'll end. And those two questions which are remaining, no? In the PGBP chapter, yes or no? Those two questions will also be addressed along with all the questions of agricultural income. Now see, in the agricultural income, this topic, very small topic, we'll start and we'll end. You will not see that topic in your ICI study mat, separate topic, no. In the first chapter, in your first module, in the first chapter, introduction and basic concept, this particular things are given, which I'm going to take up right now. Okay, no? So, tell me, what are we going to discuss right now? Agricultural income. Now, sir, tell me one thing. Agricultural income is taxable in Income Tax Act or it is exempt? So, agricultural income is fully exempt under section 10 subsection 1. But which agricultural income will be exempt? Which income will be treated as agricultural income? So the definition of agricultural income is given. So first of all, we are supposed to do the definition. Definition under section 2 subsection 1a. So as per this definition, whatever incomes which are covered in this definition only be treated as agriculture income, which you can exempt under section 10 subsection 1. So first thing which we are going to do is definition of agriculture income. Once we finish this, then second thing we are going to do composite income. Which income? When assessee does two types of activities. Number one, he is doing cultivation, meaning agriculture also, and assessee is doing manufacturing also. Now, with both these two activities, he is earning one income. And that income is known as composite income. So, to do the manufacturing, he needs raw material. And where the raw material is coming from? From his agriculture. For example, he is manufacturing tomato ketchup. So, tomato ketchup will be manufactured from tomato. So, he is himself growing those tomatoes also. He is manufacturing sugar. So, to manufacture sugar, what will be required? Sugar cane. So, he is cultivating that sugar cane also. Getting my point? Potato chips, you know, potato chips, banana chips. Potato chips, banana chips. It's not visible. No. That is okay now. Now nobody can see me. Earlier also it was the same thing. That's it. Done. That is okay now. Hello, pay attention. So you are manufacturing what? Potato chips. To manufacture potato chips, what do you want? Potatoes. You are growing that potatoes. So growing potatoes, using it as a raw material to manufacture potato chips. Growing tomatoes, using that as a raw material to manufacture tomato ketchup. Likewise, many products can be made, no? So are you doing only manufacturing activity or you are doing cultivation? Agriculture also, yes or no? So you are growing and you are manufacturing. You are cultivating and you are manufacturing. And with these two activities, you are earning only one income. That is known as composite income. Out of that income, how much income will be your taxable business income from manufacturing and how much will be your agricultural income, which will be exempt. We'll learn how to split that income. Yes or no? Some income will be exempt, some income will be taxable. But how much will be exempt, how much will be taxable? That split, how to split that income, that we are going to learn. Okay? And the last part will be partial integration of agricultural income. What did I say? partial integration of agricultural income while computing your tax liability. So whenever you are going to calculate your tax liability, you usually calculate your tax liability on your total income. But don't directly apply the tax rate on your total income. First, you will have to include agricultural income in your total income so that we can charge tax at a higher rate from you. That is known as partial integration. How that is done, when that will be applicable, and how the tax will be calculated in such situation, that we are going to learn. So three things we are supposed to learn. One, definition of agricultural income. Number two, composite income. And number three, partial integration. These three things are done, the chapter is over. But with this, all the questions of agricultural income which are there in chapter number 1, introduction and basic concepts, yes or no, those questions we are going to cover. And two questions which we left from PGBP, those two questions also will be covered. And the agriculture income topic will be over. Very, very, very important topic. Don't try to put these kind of topics in option. If the question will come from whatever we are doing right now, straight away these type of questions are going to give you cash marks in the exams, and you will know how easy the questions are. Okay, so first of all, let's do the definition. Definition of agricultural income, yes or no? Okay, definition of agricultural income. Can anyone tell me what is agricultural income? Don't give me bullshit answers, I am telling you. Income from agriculture will be agriculture income. Very good. Section 2(1)(a) defines the agriculture income which is fully exempt. So what is this agriculture income? Is defined under section 2(1)(a). Either this or this will be your agriculture income. If you own any of these incomes, only these incomes will be treated as your agriculture income, for which you can claim the exemption. Any other income you cannot treat agriculture income. You have to treat only these incomes as your agriculture income. So first income is any rent or revenue derived from a land situated in and used for the purpose of. So are you an assessee? Are you deriving any rent or revenue? This rent or revenue is from a land which is situated in Bangladesh, Nepal, China or India. Land must be situated in India, and the land must be used for agricultural purposes. So from this land, whatever rent or revenue which is derived, that will be treated as your agricultural income. So are you an assessee? Are you getting rent? Rent from a land. Which land? Any land. The land which is situated in India, and the land which is used for the purpose of agriculture. Actual agricultural use of that land is happening. Who is using? Anyone can use that land for agricultural purpose. And from that land, whatever rent or revenue you derive is your agricultural income. Understood or not? So number one, is it required that the assessee who is earning this rent must be the owner of that land? Nowhere it is written. So this rent can be earned by an assessee who is the owner of this land and may not be the owner of this land, will not make any difference. So it is not required that the rent from the land is coming to you, then you are the owner of that land also. It is not required. You just have to earn this type of rent. That's it. If you are earning this type of rent, then the rental income will be your agricultural income. Yes or no? So first of all, see, if Mr. A is the owner of land and he has given this land on rent to Mr. B, who is the original tenant. So from Mr. B, whatever rent or revenue come for this land to Mr. A, will be his agricultural income, provided the land is situated in India and used for the purpose of agriculture. Now, who is having this land? B. Who is having the land? Now, Mr. B does not want this land, so Mr. B has sublet this land to Mr. C. And Mr. C is a farmer using that land for agriculture. So, who is actually using the land? Mr. A is using? No. Mr. B is using? No. But still the rent received by both of them will be treated as agricultural income, because land is coming from rent is coming from a land which is in India and which is used for the purpose of agriculture. So whatever rent Mr. A will receive from B is for a land which is situated in India and used for the purpose of agriculture. Whatever rent which Mr. B will receive from Mr. C will be treated as agricultural income for Mr. B, even if he is not the owner. Why? Because the rent is for a land which is situated in India and used for the purpose of agriculture. So only two conditions are required. First, land must be in India, and two, use of land must be for agricultural purpose. If these two conditions are satisfied, then whether you are the owner of that land or you are not the owner of that land, whatever rent or revenue you are deriving will be treated as your agricultural income. Will you remember this? This is one note. Okay. Second, amount received or receivable in cash or in kind by one person from another person towards the use of land by whatever name called is treated as. So what will you call as rent? Is it necessary that the rent will always be received in cash? No, sometimes the rent can be received in kind also. How come kind? For example, you are a farmer, you have come to me and you are telling me, sir, your agricultural land I want to use for my agriculture. So if I give you my land on rent, so I am asking you that pay me 5,000 rupees per month as a rent for that land. So are you giving me 5,000 per month? Yes. So the rent is received in cash. Will be my agriculture income, fully exempt. But sometimes you might not be having that 5,000 rupees per month to pay. So what do you tell me? That sir, I don't have the money to pay in cash, but I promise I will pay the rent in the form of kind. How come? Whatever farm produce I will grow, out of that farm produce, 20% or 25% I will give you in the form of what? Rent. So many of the people who are living in cities have their farmlands in the villages. They don't go themselves to cultivate and do the farming and all. They give their land to someone, some farmer in the village only. And that farmer shares the farm produce with the owner. It is as good as rent only, which is given in kind. So are you a receiver of rent? Yes, but you are receiving the rent in kind. You are a receiver of rent in kind. So whatever kind rent is also coming to you is fully exempt, because that is also treated as agricultural income. Will you remember this? Rent can be given by any name, whether it can be given in cash or it can be given in kind. Will be fully exempt if that rent is for a land which is situated in India and used for the purpose of business or profession. Right now? Agriculture. Used for the purpose of agriculture. Yes or no? So this was your note number 4. Coming to note number 5. Scope of the term revenue is broader than the term rent. It includes incomes other than rent. For example, fees for grant of land on lease or for renewal of such lease. Meaning what? It is not necessary that only the rent which you will recover from such land, for such land, will be agriculture income. They are using the word revenue also. So any revenue from that land also will be treated as your agricultural income. So what is the meaning of revenue? What is the meaning of revenue? See, rent is something which you receive on a regular basis, whether in cash or in kind. But revenue, not necessarily on a regular basis. Sometimes you give your land for 5 years lease. Have you given your land for 5 years lease? So you might get 5 years lease premium in the beginning, a lump sum amount. So that person who is taking the land on lease has taken on a lease for 5 years, 7 years, 10 years, and for that entire period he has given you a lump sum amount. Are you getting that amount in the form of monthly payments? No. So have you received a lump sum, a single amount? Yes, that is nothing but revenue. But that is revenue for the use of your land only, no? So it is as good as rent only. But since it is received as a lump sum amount, as a single amount, you cannot call it rent. You call it revenue. But it is only for the use of your land only. Understanding? So even this will be treated as your agricultural income. So, for example, fees for grant of land on lease or for renewal of such lease. After 5 years, again for the next 5 years, if I will give you the land, give me a renewal fees. What is that? That is revenue. So if some lump sum amount or a single amount is given for the use of land, and that is nothing but revenue. Revenue for the use of land which is situated in India and used for the purpose of agriculture. Even that will be treated as your agricultural income. So, are you an assessee? Are you an assessee? Are you deriving rent or revenue from a land which is situated in India and used for the purpose of agriculture? Yes, then whatever rent or revenue you are deriving will be your agricultural income. Fully exempt. Is it necessary that this rent or revenue is received by owner of the land? Not necessary. Can be received by any person. Is it necessary that the amount of rent is received in cash only? No, it can be received in kind also. Is it necessary that the amount of rent is received in monthly payments on a regular basis? No, not necessary. It can be received as a single payment, lump sum payment also. Then in that case it will be treated as a revenue. Understanding? And the person who is receiving the rent in the form of share in the farm produce is known as receiver of rent in kind. Receiver of rent in kind. Will you remember? Okay. Now first income is done. Second income is any income. Now they are not talking about specific type of income. They are telling any income which is derived from such land. Means which land? No. Such land means the land which is situated in India and used for the purpose of such land. Such land means the land must be situated in India and used for the purpose of. From such land, any income is derived by performing agricultural operations. So if you perform agricultural operations on that land, which land? Land which is in India and used for agriculture purpose. Yes or no? On that land, any agricultural operations are performed. So by performing those agricultural operations also, whatever income will be derived, that income will be treated as agricultural income. So income from agricultural operations. Income from agricultural operations which are performed on such land. The land which is situated in India and used for the purpose of agriculture. Now what is agricultural operations? So agricultural operations are of two types. One is basic operations and the second one is subsequent operations. First one is basic operation. Second one is subsequent operation. So what are basic operations? The operations which you perform directly on the land before the plant comes out of the land. So you make the land ready for farming, plowing the farm. Then there are different types of activities now which you directly perform on the land. So you will directly put the seeds on farm, or first you will prepare the farm. How will you prepare? You will plow the entire farm, and then the soil of the farm will become soft. Then you will put what? Seeds. Then you will put the fertilizer. You will do the irrigation. You will water the farm. Yes or no? All these activities which are directly performed on the land are known as basic activities. Without these activities, you cannot even think about growing the crops. The crops will pop out of the land only if you perform these activities on the land. These activities are known as basic operations. So the operations which are directly performed on the land, which are the basic operations, which are compulsorily required in the case of any type of farming. Yes or no? So these are basic operations. Basic operations are agricultural operations. Yes or no? Now once the basic operations are done, in continuation to that basic operations, some more operations are performed after the seed germinates and the plant is coming out of the land. So now whatever activities will be performed, it will be in continuation to basic operations, but now these activities will not be performed on the land. These activities are performed after the seeds are germinated and the plant comes out of the land. Now these activities will make sure that that small plant which has come out of the land is becoming a proper produce so that you can harvest it. So till the time of harvesting, whatever activities you will do, okay, all those activities are in continuation with basic operations, are known as subsequent operations. Understanding? So if you are an assessee, and you are earning any income, but that income you are earning through agricultural operations, meaning basic operations as well as subsequent operations. So the income which is earned by performing these type of operations also is known as agricultural income. So if on my farm I am hiring few laborers to perform these activities. So those laborers will perform which operations? Basic operations. They will perform subsequent operations. So will I give them the money to do those activities? Yes. So is it their income? Yes. From agricultural operations will be fully exempt. Understanding what I am trying to tell? So what are the agricultural operations? Note 6 and 7. Come. Income from agricultural operations is your agricultural income, fully exempt. So what are agricultural operations? Two types of operations, basic operations and so operations directly performed on the land which are absolutely necessary for the purpose of effectively raising the produce from such land. For example, tilling of the land, sowing of the seeds, irrigation, putting the fertilizers, etc. All these activities which are directly performed on the land, which are absolutely necessary. Without that, you cannot even think about growing plants. So these operations are known as what? Basic operations. Few examples of basic operations. Okay. Now, subsequent operations are operations performed in continuation to the basic operations. After the produce sprouts from the land. So once the produce is coming out of the land, once the seed gets germinated and it pops out, it coming out from the land. So that is known as sprout. If that seed is coming out of the land and after that whatever operations are performed in continuation to basic operation, they are known as what? Subsequent operation. Example, weeding, digging, etc. These are known as subsequent operations because these are required to keep the plant alive so that the plant grows and it becomes ready for their harvest. Understanding or not? So harvesting is done for the produce which gets matured. Okay, no? So for example, I am sowing wheat, or for example, I am sowing rice. So when the rice will be ready for harvest? Till that time, whatever activities are performed on the plant, like weeding, digging, spreading of pesticides, okay, no? Removing unwanted elements from the farm, all those activities which will keep the plant alive till it is ready for harvest. All those activities are known as what? Subsequent operations. So if any person is involved in these type of operations, and from these operations also that person is earning income, then that income from these operations will also be treated as agricultural income, provided these agricultural operations are performed on a land which is situated in India and used for the purpose of agriculture. Understanding? Next one. See, any income derived from such land through performance of a process ordinarily employed to render the produce fit to be taken to the market. But before that, tell me, did you understand agricultural operations? These operations are performed on any land which is situated in India and used for the purpose of? Only then the income will be treated as agriculture income. Yes or no? Now sometimes what happens, your land is situated in India and on that land certain activities you are doing, but those activities are not agricultural operations. Like for example, on your farm, on your farmland, you are also having a poultry farm. You are also having a dairy farm. You are also having fisheries. One big pond you have made, and in that pond you are rearing fishes and you are taking out fishes from that pond and selling them. Poultry farming also you are doing. You are also doing dairy farming on your farm. All these activities are connected with your agricultural land, but these activities cannot be treated as agricultural operations. Agricultural operations strictly are what? Basic operations performed on the land so that your plants can germinate. And after the plants are germinated, in continuation to basic operations, whatever operations you are performing as subsequent operations, those are known as agricultural operation. Any other activity, any other operation is not treated as agricultural operation. So you cannot say that the poultry farming, dairy farming, even if they are done on your agricultural land, still the income from these activities cannot be treated as your agricultural income. Why? Because these activities are never treated as your agricultural operations. Even though they are performed on your agricultural land, the income from these activities will always be taxable under the head PGBP. They cannot be treated as agricultural income. Just because these activities are performed on your agricultural land does not allow you to consider the income of these activities as your agricultural income. Understanding? So, one more important thing you have to remember, that the mere fact that an activity has some connection with or in some way dependent on the land is not sufficient to bring it within the scope of the term agriculture. That is, such activities shall not constitute agricultural operation. For example, breeding of livestock, poultry farming, dairy farming, cheese and butter making, fisheries, etc. shall not be treated as agricultural operations. Accordingly, income from such activities cannot be treated as your agricultural income. They will be treated as your taxable business incomes. Will you remember? Sure. Income from agricultural operations will be treated as your agricultural income. And what are agricultural operations? Only two. Number one, basic operations. Number two, the operations which are directly performed on the land before the plant is coming out of the land. So the operations which you directly perform on the land, and after the plant gets germinated, it comes out of the land, and in continuation to the basic operation, whatever subsequent operations are performed on for that plant, survival of the plant till the plant is ready for harvest. only these operations will be treated as agricultural operations, provided they are performed on the land situated in India and used for the purpose of agriculture. Now they are saying that any income which you are deriving by performing any process. So you are performing any process which is ordinarily employed to render the produce fit to be taken to the market. Now tell me, did you do the basic operations? After doing basic operations, what happened? Your seed got germinated and it is coming out of the land as a small sprout, as a small plant. Now you will take care of this plant and make it ready for what? Make it ready for harvesting. Now once your plant are ready for harvesting, now will you harvest? Will you harvest your farm produce? After harvesting, can you sell them directly in the market? Or ordinarily some processes will be employed to make them fit so that they can be sold in the market. I'm not talking about extraordinary processes. I'm talking about ordinary processes which are required, which every farmer will do to make the produce fit to be taken to market. So first process, harvesting. First thing, if you want to take this produce to the market, first process, harvesting. After harvesting, you will directly sell. Or ordinarily some other processes are also there. You will spread that entire farm produce on the farm. In the sunlight, the moisture will evaporate, meaning drying of that harvested produce. So that unnecessary extra moisture is there that gets evaporated. If you don't do that drying process now, what will happen? Your entire farm produce becomes bad if it is not dried. So for certain number of days after they are harvested, they are laid on the farm itself so that in the sunlight they are dried. So the process of drying is an ordinary process which is required to make the produce fit to be taken to market. After drying, you will make the bunches, and those bunches you will put in thresher. You yourself will thrash them so that the outer cover and the inner grain becomes loose. If you are, for example, if you have seen on any farm, if they are cultivating what? Cultivating wheat or cultivating rice. So those rice grains, those wheat grains are there, no? You have to take those grains out of the cover, outer cover. So how you will be able to remove that wheat grain or rice grain out of that cover? For that, you will have to first dry it. After drying, you will have to hit it on the ground so that it becomes loose. Then you will have to put it in the threshing machine. Thresher will remove the outer cover and then the grains will be separated. Now these grains, there are so many impurities. Stones will be there, dust particles will be there. So you will have to do the cleaning. After cleaning, you will do the sorting. Small grains this side, medium grains this side, then long grains this side. So you will do the cleaning, and after cleaning you will do sorting, and after sorting you will do packing in different bags, 50 kg bag, 20 kg bag, and you will do this packing. All these activities are ordinary processes which are required to make the farm produce fit to be taken to the market. So if you are earning any income through such processes also, I have employed some farm laborers and those laborers are doing these type of processes. So will I give them money? Yes. So are they earning income? Yes, they are earning income through these processes only. Understanding? So if any income is earned by performing any process which is ordinarily employed to render the produce fit to be taken to the market. So through those processes also, whatever income is earned will be treated as agricultural income, provided the processes are performed on a land which is situated in India and used for the purpose of agriculture. Only then from these processes also whatever income will come will be treated as agricultural income. Will you remember this? Sure, sir. So refer note number 8. Read this entire note, very important note, very, very important note. And from this note only, there is another discussion which is coming into existence from this note only. That second part of the chapter, composite income. Do you remember? So what is given? Sometimes to make the agriculture produce a saleable commodity, the cultivator or receiver of rent in kind, the cultivator or receiver of rent in kind ordinarily employs certain processes like harvesting, threshing, winnowing, cleaning, drying, crushing, etc. All these activities, all these processes are ordinarily required to make your farm produce fit to be taken to market, to make your farm produce a saleable commodity. By doing these activities, no, you are not bringing into existence a new product. The product which you have cultivated can be sold in the market only if you do these activities. But by doing these activities, any new product is not coming into existence. If any new product is coming into existence by some processes, then those processes are not ordinary processes, then those processes are manufacturing processes. For example, you are growing tomatoes. You are growing tomatoes, plucking the tomatoes, sorting the tomatoes, cleaning the tomatoes, putting them in crates. These are the ordinary activities required to make the tomatoes a saleable commodity. If these activities are performed, are these activities changing the character of your farm produce? No, it is just making your farm produce a saleable commodity. But what if you employ some process on the tomato, because of that the tomato gets converted into tomato ketchup? And is it an ordinary process? By putting this tomatoes under this process, tomatoes remain tomato or their nature changes? They gets converted into a new commodity. That is known as manufacturing process. That is not an ordinary process. And any income from that manufacturing process cannot be treated as your agricultural income. The income which is related to that process will be taxable as your PGBP income. So now here comes the picture that what if, sir, I am a farmer. I am a farmer. I am farming some farm produce. To make the same farm produce a saleable commodity, some activities are performed like winnowing, cleaning, drying, this and that. So any income related to that activity will be agricultural income. That cannot be treated as my business income, because that activity is also known as agricultural activity, and from that activity whatever income is related will be my agriculture income, because this activity does not convert my farm produce into some other item. Yes or no? But as a farmer, what I am doing now? I am growing some farm produce, and on my farm only I am processing that farm produce in such a way that its entire character, its entire nature changes, and some new product is coming into existence. Then am I doing an ordinary process of making the produce a saleable commodity? No. Now I am doing a manufacturing process. So a farmer is doing farming also, cultivating also, but the cultivated farm produce he is not selling. He is employing some processes also on the farm, and because of those processes, the item changes its character, nature, some new item is coming into existence. Then it is known as manufacturing, and one person is doing two activities. Number one, growing as well as manufacturing. So item grown is not sold. Item grown is converted into some other item, and that other item is sold. By selling that other item, one income will be there. That income is derived from manufacturing as well as growing, both the activities. So that income will be known as composite activity, and from that activity some income will be related to your agricultural operations, will be fully exempt, and some income will be relating to your manufacturing operations, will be taxable as your PGBP income. That is what I have written in English. Please read it. Read it and let me know. Did you understand or no? If the produce is subjected to any process other than the process ordinarily employed to make the produce fit to be taken to market. For example, agriculture produce like tea, coffee, rubber, tobacco, sugar cane, then many other products are there, etc. are sometimes subjected to manufacturing process, and manufactured product is sold in the market. Then any income, meaning profit, derived from such sale of such product shall consist of certain portion of income will be treated as agriculture income, will be fully exempt, and certain portion of that income will be treated as business income, will be taxable under the head PGB. But how this split has to be done? How this income has to be calculated? Calculating this income and then splitting that income will be the second part of this chapter, which I am going to just after some time I am going to explain that also. Understanding? Will you remember this? Okay. Now what is this income? See, please read it. Sale of. By the first thing you did agricultural operations. Then after agricultural operations, the farm produce was grown. You harvested that farm produce and made it a saleable commodity. So you employed some processes which are ordinarily employed to make the produce fit to be taken to market. So once those processes are employed, then now your farm produce is fit to be taken to market. Now will you take it to the market? Yes. And will you sell it? Yes. By selling also you will get the income. That income will also be your agriculture income. Sale of agricultural produce will also be agricultural income. But this will be agriculture income only in the hands of or receiver of rent in. I am cultivator, I am cultivating vegetables. So those vegetables, if I will sell, the income in my hands will be my agriculture income. I am a receiver of rent. So I have given my land on rent to someone, and that tenant is giving me the rent in the form of agricultural produce, because some agricultural produce he is sharing with me as a rent. So I am a receiver of rent in kind. So whatever rent in kind I have received, that is nothing but my agricultural produce. I am selling that in the market. I am getting income. That is my agricultural income. So who can sell the agricultural produce? Either the farmer himself or the receiver of rent in kind. He can sell the agricultural produce. So whatever income by sale of agricultural produce in the hands of cultivator only and the receiver of rent in kind, in the hands of these persons, will be treated as agricultural income. Do you know that some agricultural produce are sold by other persons also other than cultivator and receiver of rent in kind? Go to grocery store. Can you get wheat, pulses, etc.? Yes or no? Go to any vegetable vendor. Can you buy vegetable from the vegetable vendor? Go to any fruit seller. Can you buy fruits? So they are also selling what? Agricultural produce only, no? But are they selling as a cultivator or receiver of rent in kind? No. So even if they are also earning income by sale of agricultural produce, but are they selling that in the form of, in the capacity of a cultivator or receiver of rent in kind? No. So for them, the income from sale of agricultural produce will not be their agricultural income. It will be their taxable business income. Hello. If I am a broker in APMC market, Agricultural Produce Market Committee, APMC markets are there, no? In many states, many districts, many small towns, you will see Agricultural Produce Market Committee, APMC markets. So in these markets, what will happen? The farmers or the cultivators of the nearby areas, they will come with their farm produce to sell those farm produce in this market. Even the receiver of rent can go in that market and sell the agricultural produce in that market. So either the farmers will come or the receiver of rent in kind, they will come. So if farmers, meaning the cultivators or receiver of rent in kind, they are coming and selling, then for them the income will be agriculture income. But don't you think there will be many brokers, many buyers, wholesalers who will be buying these agricultural produce? So they will buy the agricultural produce and they will sell also. So are they earning income by sale of agricultural produce? Yes, but for them it will not be agricultural income. Why? Because they are not cultivators. They are not receivers of rent in kind. Understood? Should I move ahead? First income, tell me. First income. Definition of agriculture income. First income. Any rent or revenue. Number one, derived from a land which is situated in and used for the purpose of. That land will be, that rent will be taxable as your PGBB income, no? Or it will be treated as agriculture income. This type of rent or revenue will be treated as your agriculture income. Next one. Any income. Income from three activities. Number one, agricultural operations. Now agricultural operations are of two types. Basic and subsequent operations. Yes or no? Then income from ordinary processes. Ordinary processes which are required to make the farm produce a saleable commodity. Yes or no? These are performed. These are performed to make your farm produce saleable commodity in the market. Any process which will change the character of your farm produce will not be ordinary process. That will be manufacturing process. Yes or no? But this processes usually does not change the character of your farm produce. Same farm produce is there, but to sell it, we have to clean it, we have to dry it, we have to, sorting is to be done, packing is to be done. All those processes ordinarily employed to make the farm produce saleable commodity. Then income from sale of what? Agricultural produce. Sale by whom? Either the cultivator or receiver of rent in kind. RRK means receiver of rent in kind. Okay. So if these type of incomes are earned, these incomes are agricultural income. Now the next income is income from a farm building. Income from a farm building means farmhouse. But first condition is this farm building must be used for what? agricultural purposes. And this farm building must be situated on or nearby the land. Nearby the land? No, nearby such land. Such land. Such land means which land? The land which is situated in India and used for the purpose of. So the building is situated on that land or nearby that land. But that building must be used for agriculture. So first of all, the land must be used for agriculture. Land must be used for agriculture. Land must be situated in India. On that land or in the immediate vicinity of that land, meaning nearby that land, if any farm building is there, income of that farm building will also be treated as agriculture income, provided that farm building is also used for agriculture. Understanding? And that is the reason why you are having a property, house property, of which you are the owner and not used for the purpose of your business or profession. Still this type of properties will not come to house property head. Why? Because the income of these buildings is treated as agricultural income, fully exempt. Hence these types of properties are never considered under the head house properties. Understood or not? Yes or no? Now wait. Income of farm building will be treated as agricultural income if this farm building is used for agricultural purpose and this building is situated on such land. Now if the land is rural or urban, so urban land also and rural land also. So if the land is urban land, then urban land must be assessed to local taxes or land revenue. And the rural land is there, may or may not be assessed. Assessed to what? Local taxes or land revenue. Now be a little bit careful. If your building is situated on urban land, which land? And you want your income of this building to be exempt, then your land on which the building is situated, urban land, must be assessed to local tax or land revenue. So there is one urban land. That urban land is assessed to local taxes or land revenue. And on this urban land or in the nearby vicinity of this urban land, if your building is situated, then only the income of that building will be treated as agricultural income. Provided the building is also used for agricultural purpose, this urban land on which the building is situated must be used for the purpose of agriculture. And that urban land must be assessed to local tax as well as land revenue. Local tax or land revenue. So, income from a building will be agricultural income, fully exempt, provided the building is used for agricultural purpose and building is situated on a land which is situated in India and used for agriculture. But if that land is urban land, then remember the land must also be assessed to local taxes or land revenue. But what if that land is rural land? Then that land may or may not be assessed to local taxes or land revenue, will not make any difference. On the rural land, if the building is situated, income will be agriculture income, whether the rural land is assessed or not assessed to local taxes or land revenue. Understanding? Hello sir. Now what is urban land and what is rural land. This discussion I am not going to do in capital gains. This discussion of urban and rural land will come in the capital gains also. That time I will not do this discussion. I will say that you know this. But right now we have to do this discussion. What is urban land? What is rural land? So land which is in city is urban land and the land which is in village is this bullshit you will write. No. Other bullshit you are supposed to write. What is a rural land? The land which is not an urban land is a rural land. So, sir, what is urban land? No. Not what you want to tell. No. Don't ever try. Rural land is a land which is not an. So, urban land, no. Urban land is defined. So, if your land is this, which we are defining, then it is an urban land. And the land which is not treated as urban land, automatically will become rural land. Yes or no? So, any land which falls in the jurisdiction of a municipality having a population of greater than equal to 10,000. So if your land comes in the jurisdiction of this municipality, then the land is urban. But the municipality, the population in the jurisdiction of the municipality should be 10,000 or more. Understanding? Hello. Wait. How much is the total population? 10,000 or more. That population is living in the jurisdiction of this municipality. Then whatever land which is there in the jurisdiction of this municipality is urban land. So the land which falls in the jurisdiction of such municipality, that land is a urban land. Yes or no? But wait, any land which falls within 2 kilometers, from the local limits of a municipality having population of greater than 10,000 but up to 1 lakh. So if in the jurisdiction the population is more than 10,000 but up to 1 lakh, whatever land will be there in that jurisdiction will be urban. But from the limits of that jurisdiction, after the jurisdiction is over, from the limits of that jurisdiction, after that 2 kilometers more, that land will also be treated as urban. Not just this, you can go up to 6 kilometers. The land which falls within 6 kilometers from the local limits of a municipality having a population of how much? Greater than 1 lakh but up to 10 lakhs. So how much is the population staying here? Population staying in the municipality is more than 1 lakh, but it is not more than 10 lakh. So whatever land which is there in this jurisdiction is urban, but from the jurisdiction, after the limits is over, from that limits also till 6 kilometers, whatever land is there, that will also be urban. So 6 kilometers from the local limits, after the municipality jurisdiction is over. So that is the local limits. From that local limits also, after that also 6 kilometers. So see, Bangalore municipality is there. Bangalore municipality. BBMP, no? BBMP. So this is a municipality. How much population is staying in Bangalore? See, Bangalore is not entire India. That is a small part in Karnataka. Yes or no? So BBMP is a municipality. There is some jurisdiction to which the BBMP will be there. After that jurisdiction is over, BBMP does not have any power. So BBMP has a power only to these limits. Yes or no? So whatever population is staying in this jurisdiction, is it more than 10 lakhs? How much population stays in Bangalore? More than 10 lakhs. More than 10 lakh is more than 10,000 only, no? More than 10 lakh meaning more than. So whatever land which is there in Bangalore, entire Bangalore is urban. Because the population is more than 10,000. And sir, population is more than 10 lakh also, sir. So after the jurisdiction, so you will keep on driving the car. You will reach at a point where you will come to know that this is the end of the jurisdiction of BBMP. This side you go, this side you go, this side, any side you go. Yes or no? Somewhere the jurisdiction will end. That is the end of local limits. After that also, till 8 kilometers, the land will be urban only. Because the land is falling within the jurisdiction of 8 kilometers from the local limits of a municipality having what? Population of greater than 10 lakhs. Now pictorial presentation. What? Pictorial presentation. What is this, sir? This is a circle, sir. Circle. Good, huh? Very good. Now, wait. For example, this is your jurisdiction of the municipality. So this entire land in this area is a municipality. How much is the population of this municipality? The population of this municipality should be 10,000 or more. Then whatever land is here will be urban land. Will be. And the land which falls, how much? 2 kilometers away. How many kilometers? 2 kilometers from the local limits. Meaning, this is the local limits. From here, 2 kilometers. This is the local limits. Here, 2 kilometers. Local limit. Here, 2 kilometers. Local limit. Here, 2 kilometers. Yes or no? So from the local limits of that municipality, the land which is within 2 kilometers, even that land is also urban. So the land which falls in this jurisdiction, the land which falls in the jurisdiction of the municipality, meaning this land is urban and this 2 kilometer land from the local limit is also urban. If the population staying here is more than 10,000 but up to 1 lakh. But what if the population staying here is more than 1 lakh but up to 10 lakhs? So what if the population staying here is more than 1 lakh but up to, this land is urban, sir. This land is. But now I will take how many kilometers? I will, instead of 2 kilometers, I will take 6 kilometers. So this was how many kilometers? 2. And this how much? 6 kilometer. So from the local limits, I have to check 6 kilometer. Whatever land which falls here, yes or no? This entire 6 kilometer radius, whatever land is falling, that is your urban land. Understanding? Sir, what if the total population staying here is more than 10 lakh also? Then the circle will be more bigger. Now how much? Tell me how much? Now you are going to see 8 kilometers. How many kilometers, sir? So from the local limits, now you are supposed to take 8 kilometers. So whatever land will fall within 8 kilometers, within this 8 kilometers, yes or no? This entire land will be treated as urban land. Understanding? So first of all, what is an urban land? Come on, tell me. Urban land is any land which falls within the jurisdiction of a municipality which has a population of 10,000 or more. And urban land is any land which falls within 2 kilometers, 6 kilometers, 8 kilometers from the local limits of that municipality where the population was more than 10,000 up to 1 lakh, more than 1 lakh up to 10 lakhs, or more than 10 lakhs as the case may be. So in that entire radius, whatever land is there, that entire land will be urban. Within 2 kilometer radius, within 6 kilometer radius or 8 kilometer radius from the local limits. Understanding, sir? Hello, sir. But wait, very important thing. That 2 kilometer, 6 kilometer, 8 kilometer distance by road? No. Aerial distance. So radius has to be checked aerially, not measured on the road, because roads can be like this. Within 2 kilometers, you will go 8 kilometers like this. So from the local limit, if a bird starts flying, so how much aerial distance that bird will cover? That entire aerial distance of 2 kilometers, 6 kilometers and 8 kilometers. That you are supposed to see. Will you remember this? Sure. So this is an urban land. Meaning, your land should not fall in this area. The land should not fall in 2 kilometers, 6 kilometers or 8 kilometers. Only then that land will be known as rural land. But if the land falls within this area, then this area is an urban area. The land will be your urban land. Done, sir? Hello. So, how many incomes we have covered? Come on, tell me. Number 1, rent or revenue. Number 2, income from agricultural operations, whether basic or subsequent. Income from ordinary processes. Income from sale of agricultural produce by the cultivator or receiver of rent in kind. Income from any farm building which was used for agricultural purpose. But this farm building should be situated on or nearby such land. Such land means the land must be in India and used for the purpose of agriculture. Yes or no? So on such land or nearby such land, if any farm building is there, then the income of that farm building will also be treated as agriculture income, provided the farm building is also used for the purpose of agriculture, as a dwelling house for agriculture. Yes or no? So where are you going to keep your farm equipments? In this building. After harvesting, where are you supposed to store your farm produce? In this farm building. Meaning this farm building is being used as a dwelling house for the purpose of your agricultural operations. Understanding? But if the farm building is situated on urban land, if the farm building is situated on, then that urban land must be assessed to local taxes or land revenue. Only then the income of that farm building will be treated as agricultural income. What if the farm building is situated on a rural land? Income of the farm building will be treated as agriculture income, whether the rural land is assessed to land revenue or not, local taxes or not, will not make any difference. What is urban land? What is rural land? I have already explained. Will you remember? Now last two incomes. Please remember, very, 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 very important. Okay. This income, please check. Income derived from seedlings and saplings. Seedlings and grown in a, that will also be treated as agricultural income. So there are two explanations to section 2(1)(a). Definition of agricultural income. The incomes are already defined. Rent or revenue, income from agricultural operation, income from ordinary processes, income from sale of agricultural produce, then income of farm building. Section 2(1)(a) over. But in section 2(1)(a) there are two explanations. First explanation says that any income from a nursery from sale of seedlings and saplings. Small plants are there, no? And the seeds to grow those plants. So small seedlings, small saplings, you are selling them in nursery. So any income of the nurseries also will also be treated as agricultural income and will be exempt, provided the income is derived from seedlings and saplings. Understanding? So there is an explanation to section 2(1)(a) which says that we are explaining that this type of income derived by the nurseries also will be treated as agriculture income. This will also be exempt. Even though there are no basic operations performed on the land. In the nurseries, you grow small seedlings and saplings in small pots. So there are no basic operation per se performed on what? Land. So without even performing the basic operations, still you are getting some income from seedlings and saplings in a nursery. Even that income will be treated as agricultural income. That is an explanation given. Will you remember this? So income of seedlings and saplings. Agriculture income or not an agriculture income? Perfect. Now the last explanation, second explanation, which says that any income, what did I say? Any income derived from transfer of an urban agricultural land. Which land, sir? Urban agricultural land. So if you have an urban agricultural land and you are transferring that urban agricultural land, from the transfer of this urban agricultural land, whatever income will be arising, that income will not be treated as your agriculture income. No. We are giving you an explanation. And in the beginning only, we are telling you, under section 2(1)(a), definition of agriculture income, in that definition only, one explanation is specifically telling you that if ever you transfer, transfer means sale, etc. Your urban agricultural land. So whatever income will arise on the sale of urban agricultural land will not be treated as your agricultural income, will be liable for tax under the head capital gains. Understanding or not? Now from this, one interpretation you can draw. Something they want to tell you, but they are not telling you directly or clearly. Indirect message is hidden. Tell me what message? Something is hidden. They are talking only about urban. What if any rural agricultural land you transfer? Are they telling you that it will not be treated as agriculture income? Meaning that they are not telling you directly. But with this explanation, you have to derive that interpretation. That since they does not want to exempt this income, hence they are telling about this income. If they don't want to exempt for rural also, they would have told about rural also. Are they telling you anything about rural? Meaning, if you transfer rural agricultural land, so income from transfer of rural agricultural land will be treated as agricultural income. Will not be taxable under the head capital gains. Understanding or not? Because since they are specifically giving an explanation about what? Urban, not telling anything about rural, meaning transfer of rural agricultural land and income is earned, that income they want to exempt. If they don't want to exempt, they would have definitely given about that also. And they are not giving about that, means only urban transferred capital gain will arise, will not be your exempt income. But what if rural agricultural land is transferred? Income will arise? Yes. Will not be taxable under the head capital gains. It will be exempt as your agricultural income. Directly not given, but from this you can draw that interpretation. And I will prove it in the next chapter. Capital gains. Understood? So first of all, tell me, did you understood so far? How many incomes? Tell me. How many incomes? How many incomes? 1, 2, 3, 4 and 5. 5 incomes are there. Then this nursery, seedlings and sapling. This is also an agricultural income. 6 and 7th. Transfer of rural agricultural land. The income derived will be fully exempt because that is also agricultural income. Okay, no? But transfer of urban agricultural land, the income derived will not be exempt because it will be taxable under the head capital gains. Done, sir? So how many incomes are agriculture income? Only 5 or 7? You know, na counting. First income. Rent or revenue derived from a land situated in India. Income from agricultural operations. Basic operations, subsequent operation. Any income derived from any process ordinarily employed to make the produce fit to be taken to market. Number 4. Income from sale of agricultural produce by the cultivator or receiver of rent in kind. Number 5. Income from a farm building situated on such land or in the immediate vicinity, meaning nearby that land. Okay, no? So either the building will be situated on the land or in the nearby vicinity, meaning nearby the land. Yes or no? From that building also, the income earned will be agriculture income, provided the building is used for agricultural purpose. And the land on which the building is situated, if that land was urban land, then the land must also be assessed to local taxes or land revenue. Yes or no? But if the land on which the building was situated, that land is rural land, then that land may or may not be assessed to local taxes or land revenue. Then income from nurseries, income from is also agriculture income. Then income from transfer of rural agricultural land is also an agricultural income. Any of these incomes you see in the question, please consider these incomes as agricultural income, not taxable under any of the heads, fully exempt under section 10 subsection 1. Done, sir? Yes, sir? Okay. Now pay attention. Now the next concept is composite income. Which income, sir? Composite incomes means you already know. Why? I have already told you. Single assessee is there. See, assessee is there. Are you an assessee? Yes. Now, assessee is doing one thing. What? He is cultivating. He is a cultivator. He is cultivator of some agricultural produce. That agricultural produce is used as a raw material in manufacturing process. Yes or no? And from this manufacturing process, some finished goods are made. And those finished goods are sold. And by selling, some income is earned by this assessee. What is happening? Did you understand? The same assessee is earning only one income. But this one income is not earning by only manufacturing. If income is earned only from manufacturing, then it is a business income. This one income, see, income, only one income he is earning, no, by selling the finished goods. But that finished goods he is manufacturing with a raw material which he himself is cultivating. So income, one income he is earning, but that one income is earned by two activities. First, cultivation, and second, manufacturing. Cultivation and manufacturing, both the activities taken together is giving this income. This is known as composite income. But out of this composite income, you will have to find out the profit. You will have to find out the profit. So how will you find out the profit? Tell me. Whatever expenses you have incurred from this point to this point, all the expenses you are supposed to reduce? Yes or no? What expenses? Expenses on cultivation, expenses on manufacturing, all the expenses incurred in cultivation, manufacturing will be reduced. Salary, this, that, every expense, yes or no, you are supposed to reduce. Because since this is an income from two activities, so the profit which you are going to calculate has to be for both the activities together. So to do that, to get the profit from both the activities, you are supposed to reduce the cost incurred while performing both the activities, yes or no? So the staff which is involved in cultivation, the staff which is involved in manufacturing, admin staff, this staff, to them you are going to pay what? Salary. You are using some premises, the rent of those premises. You are using some assets, so depreciation of those assets, even the depreciation of those assets which are used for agricultural operations. So every damn single thing, every cost component you are supposed to reduce, including the cost of cultivation, cost of manufacturing, all the expenses which are anyways allowable under the head PGBP, whether related to cultivation or related to manufacturing, including the depreciation of the assets which are used for cultivation as well as for manufacturing. Everything you are supposed to reduce to get what? Profit. And once you will get that profit, no, that is known as composite income, net amount. That entire amount cannot be taxed, because that is not the profit of only single activity, that is the profit of composite activity. That entire profit cannot be exempt also, because that is not the profit of only cultivation activity, that is the profit of composite activity. Now that entire profit which you have calculated has to be split into two parts. 60-40. How much? Because you are cultivating tea, processing it, manufacturing tea and selling tea. So you are a grower and cultivator of tea. Tea. You know not tea. So what are you cultivating? Tea leaves. Further, those tea leaves you are processing, and you are manufacturing tea and you are selling the tea. So will you calculate the profit of that activities? 60% and 40% as per rule 8. Rule 8 says that 60 and 40. 60% will be agricultural income, fully exempt, and 40% will be PGBP income, taxable. Will you remember? First you will have to calculate the profit. First you will have to calculate the profit from which activity? Profit from growing and manufacturing tea. So what I am telling you, sir? Sir, are you growing and manufacturing what? Tea. So which rule will be applicable? Rule 8 will be applicable, which says that composite income will be split into two parts, 60% and 40%. Composite income means profit. So first you will have to calculate the profit of these activities, like the way in which I have told you. Hello sir. How will you calculate? Sale of manufactured tea. Sale of manufactured tea minus cost of cultivation of tea, cost of manufacturing, yes or no? all the expenses allowable under the head PGBP relating to your manufacturing as well as agricultural activities, yes or no, including the depreciation of the assets used for cultivation as well as manufacturing. Reduce all those things, you will get what? Profit. Reduce all those things, you are going to get profit. Now this profit which you have calculated is nothing but your composite income, net amount, 60%, 40%. Rule 8. If it is from growing and manufacturing, T. Hello sir. Growing and manufacturing, T. 60% what? Agriculture income. And 40% PGBP income. Now if growing and manufacturing rubber is there, growing and manufacturing of rubber is there, then rule 7A will be applicable. Which rule will be applicable? Which says that 65% and 35%. 65% will be agricultural income and 35% will be PGBP income. Done, sir? Next rule. Growing and curing coffee. Growing and curing what? Coffee. Rule 7B. Rule 7B says 75% and 25%. 75% will be agriculture income and 25% will be PGBP income. Understanding? Now next one, growing, curing, roasting, grinding. Growing, curing and directly selling? No, no. Now you are making that coffee, a coffee powder. So not just growing coffee and curing and selling. No, 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 no. If growing and curing, then 75 and 25. But those cured coffee beans, you are only roasting and grinding and making it in powder, coffee powder. So are you selling coffee powder? Nescafe, brew, yes or no? So that coffee powder which you are selling will give you one income. So sale of coffee powder minus all the expenses in the manufacturing process. Yes or no? All the expenses in growing process. All the expenses allowable under the head PGBP relating to manufacturing and what? Growing. Minus the depreciation, etc. Profit will come, no? That profit as per rule 7B, you are going to do 60%, 40%. Because this is not just growing and curing. Roasting and grinding is also done. So 60% and 40%. So what about T? Rule 8. What about T? Growing and manufacturing T. Rule 8. 60, 40. Growing and manufacturing rubber. Growing and manufacturing rubber. Rule 7A. 65, 35. Growing and curing coffee. Growing and curing coffee. 75, 25. Rule 7B. Yes or no? In that same rule it is written that growing and curing, after that roasting is also done, grinding is also done. Then it will be 60, 40. Rule 7B. Only tea, coffee, rubber is not there. Other items are also there. But just imagine for every item now they will tell you percentage. They'll go mad, no? So they are telling you, come here. All other items. All other items. Now give me some example if you can. Give me some example if you can. Sugar cane to sugar. Which rule you are going to follow? Rule 7. Potato to potato wafers. Potato chips. That will be rule 7. Then tomato to tomato ketchup. Rule 7. Fruits to fruit jam. Rule 7. Fruits to fruit juice. Rule 7. Now whatever items are there now, every item will come in rule 7. Now up till now, what you were doing, tell me. Up till now, you were taking the sale price. You were taking the sale price. Sale price of your finished goods. Minus what? Cost of cultivation. All the expenses incurred in cultivation. Cost of cultivation. Then minus cost of manufacturing. all the expenses allowable under the head PGBP minus depreciation on assets used for manufacturing as well as agriculture. Now, after doing all these things, you were getting a profit. And then you used to split that profit into agricultural income and PGBP income. Yes or no? So, up till now, you were using like this. Now, whenever you are going to rule 7, a simple change you are supposed to do, instead of cost of cultivation, you will reduce fair market value of agricultural produce. You will reduce that here. That's it. So instead of cost of cultivation, what are you going to reduce? Fair market value. The moment you will reduce fair market value, no, now this bifurcation will not be required. Entire income will now be treated as your PGBP income. Why? Simple. If I tell you that income from both the activities minus profits of both, minus cost of both the activities will give you profit of both the activities, then you split. Then no problem, sir. But if instead of reducing the cost of cultivation here, you are reducing the fair market value of the agricultural produce, meaning that your cost of cultivation is already covered and your cultivation related profit is also covered in this fair market value. So now whatever profit will remain, no, that profit will not include your agricultural profits. The moment the fair market value of the agricultural produce is reduced, the profits relating to agriculture as well as the cost of cultivation both are considered here only. So now whatever profit will remain, that will be your pure business profit. No need to split that. See, if you, hello, 1 minute, see. If you are into manufacturing only, assume that you are into manufacturing only. You are manufacturing sugar. You are not growing sugar cane. Okay. Then would you have gone in the market and bought the sugar cane? Hello? At what value the sugar cane you would have bought as a raw material? That you reduce, no? Because that same amount you would have also received by selling that sugar cane in the market as a cultivator. So if you would have been a manufacturer, only a manufacturer, you would have bought the sugar cane from the market at this value. Hello? From any farmer. And that farmer would have charged. The cost of cultivation as well as cultivation profit in this fair market value only, no? Reduce that. And this will take care of what? Your cultivation profits also. Because, see, now assume that you are a farmer. And you are growing sugarcane and you are selling the sugarcane. By selling that sugarcane, how much you will earn? This much only. The fair market value. If you would have not used that sugarcane in your sugar manufacturing, would you have sold your sugarcane as a farmer? Yes. How much amount you would have received by selling the sugarcane? This fair market value only. And don't you think this fair market value would have covered your cost of cultivation as well as your cultivation related profit? So whatever cost of cultivation is there and your cultivation related profit is there as a farmer, yes or no, are covered by this fair market value. Reduce it. And if you will reduce it, whatever balance will now remain, you are not supposed to split that, because in that balance there is no cultivation related profit, because cultivation related profit already taken care of the moment you are reducing the fair market value. Now whatever profit remains is purely your business profit. No need to split this. Understanding, sir? Hello, sir? So this was your composite income. Now let's see whatever we have learned in the composite income. Yes or no? Are we able to Solve the questions on that or not? First of all, if T is there, growing and manufacturing tea, then will you take fair market value or you will take cost of cultivation? Tea is there, rubber is there, or coffee is there? Tea, rubber, coffee. Don't reduce this fair market value. Reduce the cost of cultivation. Whatever profit will come, split that profit into 60-40, 65-35, 75-25 or 60-40 as the case may be. I've already given you the percentages. Yes or no? But if any other item is there, which is not tea, not rubber, not coffee, any other item is there, then apply rule 7. Apply rule. And moment rule 7 will be applied, what are you going to do? Instead of cost of cultivation, you are going to reduce fair market value of agricultural produce, which is used as a raw material in the manufacturing process. Yes or no? So items which you are selling right now, to manufacture that item, whatever agricultural produce was used as a raw material, take the fair market value of that raw material instead of cost of cultivation. Reduce that fair market value. That will take care of your cultivation cost also and your cultivation related profits also. No need to split the final profit. Entire profit will be your PGBP income, because your cultivation profit, which is exempt under section 10(1), is taken care of the moment you are reducing fair market value. Understood? Sure, sir. Come to chapter number 1. Chapter number 1, sir. Which chapter, sir? Chapter number 1. Okay, sir? Basic concepts. Can you see basic concepts? In the basic concepts chapter, no, guys, if you will come to your illustration number 1, that is on which page, sir? 1.40. Oh, so far. 1.40. You have illustration number 1. Very difficult illustration, sir. Start. Start. Question says, Mr. B grows what? Tea, coffee, rubber or any other items? Which rule? Rule 7. And uses the same for the purpose of manufacturing sugar in his factory. First of all, whatever sugar cane he is growing now, 30% is sold for rupees as it is, as it is. And the cost of cultivation of such sugar cane is 5 lakhs. So what about the balance 70%? Used for manufacturing sugar in his sugar factory. Okay, no? So the cost of cultivation of balance sugar cane is 70% is 14 lakhs and the market value of the same is 22 lakhs. After incurring 1.5 lakhs in the manufacturing process on the balance sugar cane, the sugar was sold for 25 lakhs. Compute B's business income as well as. You want the presentation in my way? Huh? See. Sugar cane cultivated. How much sugar cane cultivated? How much sugar cane cultivated? 100%. 100, no? 100%. Out of that 100%, 30% is sold without what? Further processing. That is sold as it is. Yes or no? So you are growing sugarcane and selling sugarcane will give you agricultural income directly. Yes or no? So tell me, how much is this sold for? Selling prices? 10 lakhs. And what was the COC? Cost of cultivation? 5 lakhs. So how much is the balance? This balance 5 lakhs will be your agricultural income. Don't use the shortcuts, use the full forms. I am using the shortcut for my convenience. Okay, no? So next one. What about the balance 30%? Balance 70%? Balance 70% is processed into what? Sugar. And this sugar is sold. So here, what rule is applicable? Tell me. Rule 7 will be applicable. And as per rule 7, you are going to say, take selling price of what? Sugar. Sugar is sold for how much? 25 lakhs. Now to sell the sugar, you had to cultivate the sugar cane and you have to do the manufacturing. But cost of cultivation, cost of manufacturing, all other costs you are not supposed to reduce. You are supposed to reduce cost of manufacturing, cost of other items, sorry, other expenses. But instead of cost of cultivation, you are going to reduce the fair market value of the sugar cane. So 70% sugar cane which is converted and sold in the form of sugar, what was the cost of cultivation, sorry, what was the fair market value of that sugar cane? So fair market value will be 22 lakhs. Instead of cost of cultivation, you are going to reduce. See, this fair market value will cover the cost of cultivation, which was how much? 14 lakhs. So that 14 lakhs will be covered here in 22 lakhs. So if you would have cultivated and sold the sugar cane, how much you would have received? 22 minus 14 lakh cost. So 8 lakh rupees of your agricultural profits are already getting reduced from here. Getting my point? Minus what? Cost of manufacturing. That is 1,50,000. Any other cost? So total will be 1 lakh. Can I say this entire 1,50,000 is your PGBP income? Yes or no? And further, Here your agricultural income will also come, no? For the 70% sugar cane. So what was the agriculture income? 22 lakhs. For agriculture income, you are supposed to take fair market value of the sugar cane, which was 22 lakhs, minus what? Cost of cultivation, which was 14 lakhs. So here 8 lakhs is your agricultural income, which is already getting reduced while you are reducing that fair market value above. Hence, the agriculture income which is already getting reduced, hence whatever profit is remaining is your business profits. Therefore, taxable PGBP income is how much? 1,50,000. And agricultural income exempt under section 10(1) is how much? 13 lakhs. How did you get this 13 lakhs? 5 lakhs plus 8 lakhs. 5 lakh for 30% and 8 lakh for 70%. This will be 13 lakh. This is what your question is asking you to calculate. Easy or difficult? If you are presenting in this way also, you will get full marks. Don't worry about that. Okay? Should I move on? Next question. So let's go to the next question. Question number 2. Illustration number 2. Mr. C manufactures latex. Latex means rubber. Manufactured rubber is known as latex from rubber plants grown by him in India. Grown by him in India. These are then sold in the market for 30 lakhs. The cost of growing rubber plant is 10 lakh and that of manufacturing latex is 8 lakh. Do one thing. How much is the selling price of the finished goods? 30 lakhs you are going to get from sale of what? Manufactured rubber. Now here, can I say Rule 7A will be applicable? Why? Because you are growing and manufacturing rubber. So Rule 7A will be applicable, and whenever Rule 7A, Rule 7B and Rule 8 are applicable, you don't reduce the fair market value, you reduce the cost of cultivation. So what is the cost of cultivation of rubber? 10 lakh. What is the cost of manufacturing? 8 lakh. Any other cost, depreciation, etc.? No. So what will be the profit? Now this 12 lakh will be split into two parts. 65%, that is how much? 7 lakh, 7.8 lakhs, and 35% will be 4.2 lakhs. This will be your PGBP income and this will be your agriculture income. Higher percentage agriculture, lower percentage PGBP. Understood? Please check the final answer. 7.8 and 4.2. Done, sir? Very difficult? 2 marks MCQs can be asked. Like this. Next one. Come to the next part. Illustration number 3. Hey, do one thing. On this page number 1.46 now. On this page number 1.46, there are certain examples of agriculture income and non-agriculture income. Write down. These are the examples as per various court judgments. So in the various court judgments, the courts have decided that whether this type of income will be treated as agriculture income or a non-agriculture income. Yes or no? So you just have to read them once. That's it. Okay, no? Now this is done. 2 examples are done. Now illustration number 4, 5. Hello? Illustration number 4. 3. Where is 3? 1.56, no? Now see, from this illustration now, the calculation of tax liability and everything is starting. You know how to calculate the tax liability and all? How to calculate the tax liability? First of all, you will calculate your total income. Because I need to tell you this, only then I will be able to teach you the concept of partial integration. So if you want to learn the partial integration, first you will have to know how to calculate the tax liability. That I have already told you in the very first lecture, that how to calculate the tax. To calculate the tax, first you will have to calculate the. Now pay attention, very important discussion. If you will forget this now, 15 marks question where total income and tax liability calculation will be there. The tax liability you will never be able to calculate. So first and foremost thing, to calculate the tax, what you do? First you calculate your total income. On that total income you have to apply the rates. So now see, if the assessee is an individual, HUF, AOP or BOI, or he is AJP. In the case of these assessees, okay, two schemes are there. One is default tax regime, another is optional tax regime. Yes or no? Default tax regime means 115 BSC, and another tax regime is not following 115 BSC. Optional tax regime, normal tax regime. Okay, no? So if these assessees are not following 115 BSC, not following 115 BSC, or they are following 115 BSC. Now what is the case here? First, here you will calculate what? Total income after claiming what? All the available exemptions and deductions. So whatever exemptions and deductions are available, you claim all of them, and after claiming them, you calculate your total income. Hello? Under the head salary, claim all the 3 deductions. Under the head house property, claim both the deduction, whether property is LOP or SOP. Under the head PGBP also, claim all the deductions. Yes or no? Chapter 6 a deduction, all the exemptions like HRA exemption, 10(5) exemption. All the available exemptions and deductions are allowed. You claim them and calculate your total income. Now whatever total income is calculated, you have to split that total income into 2 parts. Some total income will be special incomes. Which incomes, sir? On those special incomes you will apply special tax rates. Like LTCG will be there, you will apply LTCG rates. STCG, short-term capital gain, will be there, you will apply short-term capital gain rates. Winnings income will be there, you will apply 30% tax rate. Yes or no? So certain special incomes will be there. So separate those special incomes. On those special incomes you are supposed to apply what? Special tax rates. Understanding? Now what about the balance incomes? Balance total income you have to apply which rates? Apply normal tax rates, normal slab rates, which are first 2,50,000. Hello, first 2,50,000, no tax. If you are a senior citizen, up to 3 lakhs, no tax. If you are a super senior citizen, up to 5 lakhs, no tax. Then 2,50,000 to 5 lakh, or 3 lakh to 5 lakh. You have to apply 5%. Then 5 to 10 lakh, apply 20%. Then over and above 10 lakh, apply 30%. We all know that tax rates. Yes or no? Apply those tax rates and calculate the tax. Now the tax which you have calculated here and the tax which you have calculated here, add both the taxes. You will get what? Tax on total income. Everyone getting this? In that, will you add a surcharge at particular rate? Now tell me, what will be the rate of surcharge? The rate of surcharge depends on your total income. Guys, total income means this total income, color yellow color. So you have to check the total income. If the total income is up to 50 lakhs, surcharge will not be added only. No surcharge. But what if that total income is more than 50 lakhs but up to 1 crore? Then surcharge will be at the rate of 10%. What if that total income is more than 50 lakhs, more than 1 crore but up to 2 crores? Then this will be 15%. Understanding or not? Then what if the total income is more than 2 crores? Up to 5 crores, then 25%. And total income is more than 5 crores, then 37%. Understood or not? Pay attention. The higher rate of surcharge, 25% and 37%, is not applicable on certain incomes. 4 incomes. LTCG 112, LTCG 112A, STCG 111A, and tax on dividend incomes. 4 incomes. Guys, how many incomes? Number 1, LTCG 112, LTCG 112A, and STCG 111A, and dividend income. On these 4 incomes, whatever tax you have calculated, on that tax maximum surcharge can be 15%. Meaning higher rate of surcharge, 25% and 37%, not applicable on these taxes. Sure, sir? Hello? So for example, if my total income is 3 crore 40 lakhs. How much, sir? 3 crore 40 lakhs. Out of that total income, LTCG under section 112, which is taxable at 12.5% rate. In the capital gain chapter, you will come to know the rate of this capital gain also. Yes or no? So right now, remember that LTCG under section 112, what is the tax rate? 12.5%. Now out of this 3 crore 40 lakhs, some amount is my LTCG. On that I have to pay how much tax? 12.5%. For example, LTCG here was 1 crore 20 lakhs. How much? 1 crore 20 lakhs. So can I say my balanced total income is 2 crore 20 lakhs? Yes or no? Now will I calculate the tax on this? Tax on this at the rate of 12.5%. And on this also, I will apply my normal rates or 115 BSE rates as the case may be. Sometimes 115 BSE rate will be applicable, yes or no? So whatever tax I will calculate by applying the normal rates or 115 BSE rates. Now see, this tax plus this tax, on both the taxes I have to apply surcharge. Why surcharge, sir? Because my total income is more than 2 crores. Total income is more than 2 crores, but up to 5 crore. So along with tax, I will have to add surcharge also. On this income, the higher rate of surcharge is not applicable. LTCG 112, LTCG 112A, STCG 111A, or a dividend income. So whatever tax you have calculated on these 4 incomes, Number 1, LTCG 112, LTCG 112A, STCG 111A, and dividend income. On these 4 incomes, whatever tax you have calculated, on that tax maximum surcharge can be 15%. Higher rate of surcharge, 25% and 37%, is not applicable on taxes on these 4 incomes. So here, whatever may be your total income, even if the total income is more than 2 crores, more than 5 crores, here the maximum surcharge cannot be more than 15%. Here the surcharge will be 14%. But now tell me, after eliminating this income from your total income, is your total income still more than 2 crores? Yes or no? On that, whatever tax is coming, on that you apply 25%. Because from your total income, after eliminating this income, still your total income is more than 2 crores. On that, whatever tax you have calculated, on that tax, you will now apply 25%. Will you remember this? Hello? Now wait. Should I change it a little bit? If it was 1 crore 80 lakhs, and how much is this then? 1 crore 60 lakhs? 1 crore 60 only, no? Okay. Now tell me. On your LTCG, whatever tax you will calculate, on that tax, surcharge cannot be at higher rates. So here, confirm it is on this tax. How much surcharge? Maximum 15%. Higher rate of surcharge cannot be applicable. Now, how much surcharge will be added here? After eliminating this income from your total income, how much total income remains? Is it still more than 2 crores? So on this also you will apply 15%. Understood? Hello? When will you apply higher rate of surcharge? After eliminating this, if still this is more than 2 crores, then apply 25%. But after eliminating this, if this amount falls below 2 crores, then 15% on this also. Understanding? Sure, sir? Now one more example. What if this was 3 crores and this was only 40 lakhs? No surcharge or surcharge? No surcharge. I'll give you a tight slap. The moment your total income is more than 2 crores, surcharge is applicable. So is your total income more than 2 crores? Yes or no? Surcharge has to be there. But on this maximum, but after eliminating this, whatever remains, even if it goes below 50 lakhs, surcharge will come here also. You just thank us that we are not charging 25%. But that does not mean that you are not going to pay surcharge. Here also the surcharge will come. Sir, but this is below 50. You don't have to see this. You have to see this. Is it more than 2 crores? Surcharge has to be there. Is it more than 50 lakhs? Surcharge has to be there. Is it more than 1 crore? Surcharge has to be there. You will have to check your total income. If your total income is more than 50, more than 1 crore, more than 2 crore, more than 5 crore, 100% the surcharge will come. But here it cannot be more than 15%. For example, your total income was only 80 lakhs. Is it more than 50 lakhs? But less than equal to 1 crore? Yes or no? Here also 10%, here also 10%. No problem. Is your total income 1 crore 20 lakhs? Yes or no? If this is 1 crore 20 lakhs, then here also 15%, here also 15%. No problem. But what if your total income is more than 2 crores? Then higher rate of surcharge cannot be applied on this tax. It can be applied only on the balance tax. Balance tax. Confirm higher rate of surcharge. Because after eliminating this is still more than 2 crores, then on that also higher rate of surcharge. Yes or no? But what if this comes below 2 crores? This comes below 2 crores. After, from this total income, after eliminating this balance comes below 2 crores. Then on this balance also you are supposed to charge 15%. Higher rate will not be applied. But that does not mean that if it is less than 50 lakhs, that means you are not going to pay any surcharge. On that also you are supposed to pay 15%. Understood? Here it can be LTCG also, LTCG 112A also, LTCG 111A and dividend income. Yes or no? Did you understand this calculation? Not today, no. All the questions of chapter number 1 you are going to solve at home. All the questions. Those questions involve these type of calculations. Now pay attention. See here. Can I say You are not following 115 BSc? You are not following? Will you calculate your total income? Total income after, what did I say? You are going to calculate your total income after claiming all the available exemptions and deductions. And from your total income, special incomes, you will apply special rate, you will calculate the tax. Balance income, you will apply normal slab rates and you will calculate the tax. You will add both the taxes. The tax on total income will come. Add surcharge. Surcharge at applicable rates. Either 10%, 15%, 25% or 37%. Depending on your total income. Depending on your total income, more than 50, up to 1 crore. Then on your special income also 10%, normal income also 10%. What if the total income is more than 1 crore but up to 2 crores? Then special incomes also 15%, normal incomes also 15%. Yes or no? Then what if your total income is more than 2 crores? Then 25%. Total income is more than 5 crores. Then 37%. Remember the higher rate of surcharge. Higher rate of surcharge, 25% or 37% is not applicable on 4 taxes. Taxes on LTCG 112, LTCG 112A, STCG 111A and dividend income. On those 4 incomes, whatever taxes you have calculated, separate that tax. On that tax, maximum 15% surcharge will come. On the balance income, the higher rate of surcharge will be applicable only if after eliminating these incomes, balance income still is more than 2 crores or 5 crores, as the case may be. Otherwise, on that income also you are supposed to apply what? 15% or 25%, as the case may be. Getting my point? Hello, sir. So, tax on total income, have you calculated? Then apply surcharge. So you will get tax including surcharge. On that you will pay 4% cess. But wait, always the tax including surcharge will come. Or from this tax, rebate can also be available. So minus what? Minus what? Rebate. Rebate is under section 87A. So some rebate can be availed. So if surcharge will be there, rebate will not be there. And if rebate will be there, surcharge will not be there. Or both of them will not be there. So surcharge is there and you are looking for rebate, then rest in peace. And rebate is there, then you are looking for rest in peace. Any one will come. So tax including surcharge will come or tax after rebate will come. Yes or no? This or this. This or this. Okay, no? Now after adding or reducing, what you will get? Tax on total income including surcharge or tax on total income after rebate. This tax you are going to get. In this tax you are going to add what? Health and education cess. At what rate? This 4% will be applicable on which amount? This 4% will be applicable on this amount. Yes or no? Now what is the total? Tell me. That total will be your gross tax liability. Out of that, minus TDS, TCS, minus advance tax. Later on, relief also we have seen. Relief under section 89. We have already calculated, no? Under the salary chapter. Yes or no? So that relief, if available, will be reduced under this, from this point. And there will be one AMT credit. We are going to do one chapter known as alternate minimum tax. So in that, AMT credit will be there under section 115 JD. That AMT credit. So from your gross tax liability, TDS, TCS paid, advance tax paid during the previous year, relief under section 89 or AMT credit. You reduce all these items, what are you going to get? Either net tax liability or refund due if the negative amount is there. Yes or no? So if positive is there, then net tax liability, or negative is there, then it is refund due. Will you be able to calculate like this? Now two important things you are supposed to remember. First thing, surcharge at higher rates, not applicable on certain income tax. Second thing, rebate under 87A. Rebate under 87A will be available if your total income is up to 5 lakhs. Up to 5 lakhs. And you are a resident individual. Then maximum rebate you can claim is 12,500. So whatever tax you have calculated, that tax will be allowed as a rebate up to maximum 12,500. Will you remember? Yes or no? But remember, any special tax, what did I say? Any special tax cannot be claimed as rebate. So tax on your capital gains, long term, short term, yes or no? Then tax on your winnings. All those taxes you cannot claim as rebate. So any special tax, remove that tax, after that tax, whatever tax remains, only can be claimed as rebate. Up to maximum 12,500. Provided you are a resident individual having a total income of up to 5 lakhs. Done, sir? Done, sir? So now tell me, what if you are following 115 BSc? What if you are following 115 BSc, sir? Same process you are supposed to follow. First, what are you going to do? First, you are going to compute what? Total income. But now the total income will be calculated without, what did I say? Without taking certain deductions and exemptions. Do you remember? Under the head salary, you will not get deduction for professional tax, you will not get deduction for entertainment allowance, HRA exemption will not be available, 10(5) LTA exemption will not be available, other allowances which are exempt will not be allowed as exemption, like children education allowance, children hostel expenditure allowance. These exemptions are not available. Yes or no? Do you remember or not? Under the head PGBP, you will not get the deduction for additional depreciation. You will not get the deduction for donations made for scientific research. You will not get the deduction under section 35AD. Under the head house property, you are not going to get deduction for interest on housing loan for SOP. So the deductions and exemptions which are taken away, without claiming those deductions and exemptions, you are supposed to calculate your total income if you are under 115 BSc. Now whatever total income you have calculated, from that on special incomes, guys, the things will not change. The special incomes are taxable at what rate? Special rates. So apply special tax rates. So by applying special tax rates, you are going to get tax on your special incomes. Now what about the balanced total income? Sir, balanced total income will be taxable at what rate? Apply normal tax rates? No. Now normal tax rates will not be applicable. Now 115 BSc tax rates will be applicable. Now I am going to tell you 115 BSc tax rates. First 4 lakhs. Basic exemption limit. So instead of basic exemption limit 2,50,000, now the basic exemption limit will be 4 lakhs. For senior citizen, super senior citizen, there the higher basic exemption limit was available, 3 lakhs and 5 lakhs. That is not there. Whatever type of individual you are, whether senior citizen or a super senior citizen or a normal individual or HUF, AOP, BY, AJP, any person or any individual, whether a senior citizen or a super senior citizen, yes or no? Maximum basic exemption limit is 4 lakhs. Then Slabs of 4 lakhs. 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24 and above 24. So slabs will be 4 lakhs slabs. Yes or no? So first 4 lakhs, no tax. Then all the slabs of 4 lakhs. Yes or no? So 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24. And any total income over and above 24. Yes or no? 5%, 10%, 15%, 20%, 25%. And any total income over and above 24 lakhs will be 30%. So apply those rates. Those are 115 BSE rates. And by applying those rates, you will calculate your tax. And that tax plus special tax will give you tax on what? Total income. Yes or no? At what? And add surcharge at a particular rate. And this surcharge, last time what did I tell you? Surcharge is at what rate? If total income up to 50, no surcharge. Then 50 to 1 crore. How much? 10%. 1 to 2, 15%. And 2 to 5. And 5 to above 5. Here it will be 25% only. So that 37% which gets applicable. 37% which gets applicable if your total income exceeds 5 crores will not be applied here. Here it will remain 25%. So first change, tax rates. Tax rates are different. Second change, surcharge. All the surcharge rates are same, but 37% surcharge rate is not applicable. Even if the total income exceeds 5 crores, the rate of surcharge will remain 25%. And see, I told you, no, higher rate of surcharge, 25% or 37%. Not applicable in 4 cases. That same concept applicable here also. But what is the highest rate of surcharge here? 25%. That will not be applicable on 4 taxes. Tax on LTCG, LTCG 112, 112A, STCG 111A and dividend income. And do you remember, if surcharge is added, then it is okay. Sometimes rebate is also reduced. When do you get rebate? When do you get rebate? If you are a resident individual and your total income is up to 5 lakhs, then you get rebate. Which taxes cannot be taken as rebate? All the special taxes cannot be taken as rebate. All other taxes can be taken as rebate up to maximum 12,500. Here also, all the taxes can be taken as rebate other than special taxes. But now the rebate will be available if your total income is up to 12 lakhs. Up to, so even if your total income is more than 5 lakhs, still you are able to claim the rebate, provided your total income is not more than 12 lakhs. So are you a resident? Yes. Are you an individual? Yes. Will you get the rebate? Yes. If your total income is more than, up to 12 lakhs. Then whatever tax you have calculated other than your special taxes will be allowed as a rebate up to maximum 60,000. So the amount of rebate also will be higher. Instead of 12,500, it will be 60,000. Understanding or not? Hello? So comparing both the things, 115 BSE, not 115 BSE. 115 BSE, not 115 BSE. Yes or no? So first change is in tax rate. First change is in tax rates. Will you remember 115 BSE? Nil, 5, 10, 15, 20, 25 and 30 and 4 lakh slabs. Yes or no? Here it is nil, 5%, 20% and 30%. First 2 lakh 50, no tax. For senior citizen, 3 lakhs, basic exemption. For super senior citizen, 5 lakh, basic exemption. Yes or no? Here for everyone, the basic exemption limit is 4 lakhs. What will be the surcharge rate? 10, 15, 25, 37. Here it will be 10, 15, 25 and 25. Even if the total income is more than 5 crores. Yes or no? Surcharge is not applicable at higher rates on 4 taxes in both the cases. Whether you follow 115 BSE or you don't follow 115 BSE. Surcharge is not applicable. in case of 4 taxes. Tax on LTCG 112, LTCG 112A, STCG 111A and dividend income. On these 4 incomes, the higher rate of surcharge is not applicable. Next one, rebate. Rebate will be available if you are a resident individual. If you are a resident individual, but your total income should be 5 lakh rupees or less, you will get the rebate. But remember, taxes on special incomes cannot be claimed as rebate. Taxes on special incomes cannot be taken as rebate. Other taxes can be claimed as rebate up to maximum 12,500. But if you are following 115 BSc, you will get the rebate if you are a resident individual. But your total income should be up to 12 lakhs. Total income should be up to. So whatever taxes you have calculated, those taxes will be allowed as a rebate. But here also, special incomes, whatever taxes are there, cannot be claimed as rebate. Taxes on special incomes cannot be claimed as rebate. Other than that, all other taxes can be claimed as rebate up to maximum 60,000. Up to maximum. Now pay attention. What happens if assessee is resident plus individual plus the total income is up to 5 lakhs? Will he get rebate? Will he get rebate? The answer is yes. But what if his total income exceeds 5 lakhs? Even 10 rupees extra. 5 lakh, 10 rupees. 5 lakh, 1,000. 5 lakh, 5,000. Even a marginal increase over and above 5 lakh. Will he get any rebate? No. So the moment here the total income exceeds 5 lakhs, the assessee loses what? Rebate. Entire 12,500 rebate is gone. Even if there is a marginal increase in the total income. Yes or no? But don't you think you get the rebate under 115 BSc also? Hello? If you are a resident, if you are individual, hello, and your total income is up to 12 lakhs. Up to 12 lakhs, definitely you are going to get rebate. But even if your total income is higher than 12 lakhs, marginally higher, not too much. What did I say? Marginally. A small amount of increase in your total income. That does not mean that you will lose the rebate. We are going to give you the rebate. But full 60,000 will not be available. Some amount of rebate still will be available. Now how to calculate that? How to calculate that? Okay. First of all, pay attention. First you tell me here. One important point. Important points. If total income exceeds what? 5 lakh by whatever amount, even a small increase, yes or no, then here the rebate will not be applicable. Rebate under section 87A will not be applicable. But here I will write down the same thing over here. If the total income exceeds 12 lakhs by marginal amount. What did I say? Marginal amount. Not too much, but marginal amount. Still the rebate will be available. Still the rebate will be available. Now how to calculate this rebate? Okay, no? You are going to do A, then you are going to do B, and then you are going to compare A and B. So take your total income. Take your total income and minus 12 lakhs. So you will get the total income over and above 12 lakhs. So how much is the total income over and above 12 lakh? So for example, the total income is 12 lakh 10,000. How much? So total income in excess of 12 lakh is how much? Only 10,000. See, only 10,000 increase in the total income, very marginal increase, and you will lose your rebate. Yes or no? Don't worry. Since there is a marginal increase in the total income by only 10,000, you will not lose your rebate. Do one thing. First check how much is the total income in excess of 12 lakhs. So total income minus 12 lakh, you will come to know that this much amount is excess over and above 12 lakh. Now calculate what? Tax on your total income. Calculate the tax on your. So whatever total income was there, how much was the total income, sir? 12 lakh 10,000. 12 lakh. Calculate the tax on that. First 4 lakhs, nil. 4 lakh to 8 lakhs. On this 4 lakh, 5% will be 20,000. Yes or no? 8 lakh to 12 lakh. 8 lakh to 12 lakh. On this 4 lakhs, 10% will be 40,000. Then 12 lakh to 12 lakh 10,000. On this 10,000, you are going to calculate 15%. How much? 1500 plus 40,000 plus 20,000. 61,500. So the tax here will be 61,500. Is this tax more than the increase? Is this tax more than the increase in total income? So you have to check. B is greater than A. B is greater than. If this equation gets satisfied, therefore rebate will still be available. Rebate will still be available. Now how much will be the rebate? B minus A. How much was B? 61,500 minus 10,000. Minus 10,000. So how much will be the rebate? 51,500. That amount you take as rebate. Full 60 we will not give, but 51,500 rebate we will give. Understanding? One more example. 12 lakh 40,000. 12 lakh 40,000. Now tell me, what will be A? What will be A? See this. 12 lakh 40,000 minus 12 lakh. What will be A? 40,000. On 12 lakh 40,000, you calculate the tax. So first 4 lakhs, nil. 4 lakh to 8 lakh, it will be 20,000. 8 lakh to 12 lakh. 8 lakh to 12 lakh. This will be 10%, 40,000. And on 12 lakh to 12 lakh 40,000, on this 40,000, you are going to calculate 15%. That will be 6,000. So total tax will be 66,000. Yes or no? So what will be here? 66,000. And what is here? 40,000. Is 66,000 more than 40,000? Yes or no? So B is more than A. Rebate will still be available. How much? B minus A. B minus A will be 66,000 minus 40,000. How much? 26,000 rebate will still be available. 60,000 will not be available, but maximum 26,000 still will be available. Yes or no? Now last example, 12 lakh 90,000. 12 lakh. So what will be the amount here? 12 lakh 90 minus 12 will be 90,000. Yes or no? So on that, now you are supposed to calculate tax. So nil plus 20,000 plus 40,000, and on 90,000 you are going to calculate 15%. So 90,000 into 15% will be 13,500 plus 40,000 plus 20,000. 73,500. And this is how much? Now is your B more than A? No rebate. Pay the entire tax. 73,500. Entire tax you are supposed to pay plus 4%. Understood? So till the time B is greater than A, you will keep on getting the rebate. The moment B becomes equal to A or B is less than A, you will stop getting the rebate. But don't worry, even if your total income exceeds 12 lakhs, still you are going to get rebate. But in that case, the rebate will be calculated like this. Understood? Understood? Now pay attention. See. Here. Now rebate is done, sir. So after adding surcharge or reducing rebate, what are you going to get? What are you going to get? Tax including surcharge or tax after rebate. Duplicate. Done, sir? Done, sir? What are you going to add? Health and education says gross tax liability will come. Same to same. There is no change in all these items. Yes or no? TDS, TCS you will reduce. You will reduce advance tax. You will reduce relief and everything. Understanding or not? But here, can you see, there is one small thing, AMT credit, that you cannot reduce because the provisions of AMT are not applicable if you follow 115 BAC. So since the provisions of AMT are not applicable, your AMT credit we are not going to allow you from your tax liability. Understanding? Rest all the other things you can claim as it is. So now important point number 1. Important point number 1 for relief. Understood? Now second point. Rebate cannot be taken for taxes on what? On special incomes. Sir, copy, paste here also. Done, sir? So your special taxes cannot be claimed in the form of rebate. The balance taxes can be claimed up to maximum 12,500 up to 60,000 as the case may be. Now second thing. Higher rate of surcharge. Higher rate of surcharge, which is at the rate of 25% in some cases and in some cases at the rate of 37%, shall not be applicable on tax on LTCG under section 112 or 112A or STCG under section 111A and dividend income. The same point will be applicable here also. Duplicate. Okay, no? But wait, here the highest rate of surcharges. So I will not write this 37%. Okay, so higher rate of surcharge at the rate of 25% shall not be applicable on these taxes because here the highest rate of surcharge is 25%. Are you getting the comparison? Both the things, understanding or not? Now tell me. Now this comparison and everything we have done. Now we are supposed to calculate the tax liability. Yes or no? Hello sir? Pay attention. If you are an assessee, you are such an assessee to whom slab rates, which slab rates? Either normal slab rates or 115 BAC. Any slab rate, yes or no? So assessee is a person to whom slab rates are applicable. So are you an assessee? Yes. To you, on your total income, slab rates are applicable? Yes. Normal slab rates or 115 BAC rates. So which type of assessees? Individual, HUF, AOPBY, AJP. So the concept which I am going to discuss right now is not applicable if your total income is taxed at flat rate. Like in the case of partnership firm, flat rate of 30% is there. In the case of companies, flat rate of 30% or 25% in the case of domestic companies. Yes or no? So the assessees to whom the flat rates of tax are applicable are not covered. Only those assessees whose tax rates are progressive. Tax rates are progressive. Meaning from 0 it will become 5, 5 it will become 20, 20 it will become 30, the more and more total income, the more and more tax rates will increase. Tax rates are also increasing in 115 BSE. Like 0, 5, 10, 15, 20, 25. So even 115 BSE. So whether you pay tax under 115 BSE or you don't pay tax under 115 BSE, are your tax rates progressive? Yes. So you are an assessee to whom slab rates are applicable. Now, the assessee to whom slab rates are applicable is also earning net agricultural income, which is exempt under section 10(1), for which he has already claimed the exemption under section 10(1), and this net agricultural income is more than rupees 5,000. So during the previous year, you have earned a net agricultural income of more than 5,000. And also your total income. What did I say? Total income is more than your basic exemption limit. Only then you are liable to pay tax also. So when are you liable to pay tax? Only if your total income is more than basic exemption limit. Because up to basic exemption limit, you are not liable to pay tax only, no? Understanding? So when are you liable to pay tax? If your total income is more than basic exemption limit. Under optional regime, more than 2,50,000. More than 3 lakhs. More than 5 lakhs. Depends that whether you are a senior citizen, super senior citizen or any other assessee. Yes or no? But under 115 BSE, your basic exemption limit is 4 lakhs. So your total income should be more than 4 lakhs if you are following 115 BSE. If all these three conditions are satisfied, what did I say? In the case of this type of assessee, if all the three conditions are satisfied, now at the time of computation, what did I say? At the time of computation of tax liability. What did I say? Computation of tax liability, partial integration of agricultural income will be done. Now you cannot directly take the total income, apply the tax rates. No. Like you have done. Yes or no? What did you do? You took the total income, you directly applied the tax rates and you calculated the tax. Yes or no? This calculation will change a little bit. Now you are supposed to integrate your agricultural income in your total income before applying the tax rates. So 3 steps you are supposed to follow. How many steps? Step number 1. Step number 1. Take your total income. Integrate your agricultural income. Agricultural income means which income? Net agricultural income, which you have already claimed, exempt, which is more than 5,000. Yes or no? So before applying the tax rate on your total income, integrate your agricultural income. Why we are doing this, you know? Because up till now you are covered by a slab rate of 20%. The moment we'll add agriculture income in your total income, now your total income will increase and will be able to calculate the tax on your income at higher slabs. So from 20% slab, you will be thrown to the higher slab. 25% or 30% slab. Yes or no? So to do that, to compel you to pay tax, to compel you to calculate the tax at higher rates, first we are going to add your total income so that if you are covered by 5% slab, you will calculate tax at 20%. If you are in 115 BSE, if you are covered by 5%, you will calculate at 10%. If you are covered by 10%, you will calculate at 15%. So that to calculate the tax at higher rates. First we will integrate the total income. Integrate the agriculture income in your total income. So take your total income. Add what? Add agricultural income which you have claimed exempt. Now what? Now add both of them. Assume that this was your total income. Assume that this was your total income, and on that total income calculate tax. This will be your tax 1. This will be your tax. But sir, this is wrong, na? In this tax, the tax on agriculture income is also calculated. No. Agriculture income is exempt. No. On the agriculture income, the tax should not be calculated. No. Yes, that is why step number 2. We are going to calculate the tax on agriculture income. And that we are going to reduce. So step number 2. Step number 2. What are you going to do? Calculate the tax on agriculture income. But wait. If you will directly calculate the tax on agriculture income, what will happen? The agriculture income will go for basic exemption limit. For example, your agriculture income was only 2 lakhs. So in this step, how much you have added? 2 lakhs. So the tax on entire 2 lakh is calculated over there. But if you will take only agricultural income of 2 lakhs and you will apply the tax rate directly on this 2 lakh, what will happen? It will be covered by basic exemption limit. No tax. Hello? In the first step, have you calculated the tax on entire 2 lakhs? So in the second step also, the tax on the entire 2 lakhs should be calculated. Hence, take your agricultural income and add the basic exemption limit. And then calculate the tax on that amount. From there, basic exemption limit will go and the tax on entire agriculture income will be calculated. Getting my point? So in step number 2, what are you going to do? Take the agricultural income which you have included above. In that you add your basic exemption limit, and on this amount, assume that this is your total income. This is your total income. Calculate tax on this. This is your tax too. Now why have you added this basic exemption limit? For example, your basic exemption limit was 2,50,000. 2,50,000 plus 2 lakh will give you 4,50,000. If you calculate tax on 450, meaning 2,50,000 go for basic exemption limit, and the tax on that entire 2 lakh will be calculated, which you have already calculated on in step number 1. So in the step number 1, when you added the 2 lakh rupees, tax on entire 2 lakh is calculated on in step number 1. So in step number 2 also, you are supposed to calculate the tax on entire 2 lakh, which is not possible till the time you don't add basic exemption limit. If you will not add basic exemption limit, what will you have? You will direct cover this entire amount in the basic exemption limit and no tax will be calculated. Yes or no? So to calculate the tax on that entire amount of agriculture income, we have to add that basic exemption limit. That is the logic. Yes or no? So now tell me, this is the tax only on your agriculture income. And this is a tax which includes the tax on your agriculture income. Yes or no? Now in your step number 3. In your step number 3, what are you going to do? You are going to calculate tax on total income, only the total income. So to calculate this tax on total income, have you calculated tax 1? Tax 1 is tax on total income as well as tax on agricultural income minus tax 2. This is the tax only on agricultural income. Reduce this, whatever tax will be there, that will be your tax on total income. Now, directly you don't follow that process. First you will do step 1, then step 2, then step 3 you will get tax on total income. Then after this entire process is same. Add surcharge if applicable, less rebate if applicable, tax on total income including surcharge after rebate will come. Add 4%. Understanding or not? So this is the entire process which we have to follow. Will you be able to do it? Will you be able to do it? No or yes? But with the help of numbers, no, it will be more convenient for us. So we'll take a small break. After the break, we are going to meet and we are going to finish this. And then we are going to start with capital gains. Okay, no? Take a break, 1 hour.